Milan. Welcome to Finance Mandarin's Reading Club. I am Tara. Firstly, I thank you all for joining us from different parts of the world. We have hosted several episodes of the Reading Clubs in the past. If you are interested, you could watch our recorded session on Finance Mandarin's YouTube channel. In this episode of our Reading Club, we are going to dive into the book named Moats and Marathons by Mr. Jeffery Towson. Today, we are honored to have Mr. Towson share with us some insights into this book. First of all, please allow me to introduce you to our host today, Vienne Lee, the CEO of Finance Mandarin. Vienne has over 20 years of experience coaching CEOs, investment professionals, and lawyers from the buy side to sell side of the capital market. Let's welcome Vienne to say hi to us.
Good afternoon. Welcome all our friends to join our live event today. Welcome to join our Finance Mandarin reading books. Since 2019, we've been conducting more than 50 live events in LinkedIn and different social media. We're so honored to invite different VIP speakers to join with us today. So today we have our old friend and dear friend, Jeffery Towson, to join us again. And welcome to join. And I also here to take this opportunity to welcome all our alumni and friends and connections who highly support Finance Mandarin this pandemic situation. We thank you for you sending your greetings and sending your warm greeting for us. So let me give you to Jeffery. You're introducing Tara.
Thank you, Vienne. Of course, today we are very honored to have invited Mr. Jeffery Towson, the author of this book. Mr. Towson is an equity investor and advisor, a professor, and a best-selling author and keynote speaker, which topics focus on digital competition and China/Asia's leading tech companies. He was also ranked #1 on LinkedIn's top voice for finance globally, and also the top voice for China. Now, without further ado, let's welcome Mr. Jeffery Towson to the stage.
Okay, thank you, everybody. It's a pleasure to be back on the show. I've been here a couple of times, and I study basically tech companies, digital companies, which is software, as opposed to hardware, which is a little more engineering-ish. And I look for who's going to win, who's successful, why, what's their business model. And I focus a lot on China, Asia, but really kind of a lot of places now. So these are the Alibabas, Tencent, Baidu, Amazon, Google, these companies, right? And the question I focus on is, number one, let's say, does it have a competitive advantage? Is it structurally superior than other companies? Is this a fast car running, racing against a bicycle? I'm looking for structural strength such that this is probably going to be the company that wins the fight, competition-wise. And as part of that, I've been doing this for quite a number of years, and I've summarized all of this in what is going to be sort of 5 short books. I've already released the first 2. They're called Moats and Marathons. And basically, that's the simplest version of what I'm looking for. I'm looking for a digital company, a tech company that has a clear moat and has a clear marathon it is running. If I can get a good answer to those 2 questions, that's generally a very strong company. Now, there's a lot more to it than that, but that's the simple framework. What's the moat? What's the marathon? And it's all about building a competitive advantage as a digital business. That's kind of where I focus, is that one question. Now, there's a little bit of a distinction there that I generally have to make, which is I'm looking for a Warren Buffett type company, a competitive advantage type company, a company that dominates its competitors, that can't be beat. I don't care how smart you are. I don't care how much money you have. You can't beat this company because it's got a moat around the castle. That doesn't always mean it's super profitable, and it doesn't always mean it's high growth. Oftentimes, when people look for the best of the best company-wise, they're generally looking for 3 things at the same time. They're looking for a moat, they're looking for growth, and they're looking for profits. And when they get all 3 of those in one thing, they say, oh my God, this is Google, this is Facebook, this is Alibaba. That is awesome. I'm looking at just the moat component. It is very possible to have a very strong business that nobody can beat that doesn't have a lot of growth. If you have the best hotel on Central Park West in Manhattan, you can be very strong as a business because there's not that many places. Doesn't mean you're going to double your revenue every year. In fact, you can't because you're a building. So you can dominate an industry that doesn't have growth, and you can dominate an industry that doesn't necessarily make a lot of profits. Uber is an example of a high growth, competitive moat business that doesn't make a lot of cash. So there's a couple things going on at the same time, but the one I always start with is, does it have a competitive advantage? So that's number one for me. And then number two is I'm looking for growth. And so people sometimes mix that together. I generally look at the moat question. And the reason I focus on this is because if you ask Warren Buffett, and people have asked him, what is the number one thing you look for in a business? He'll say it's a moat, a competitive advantage. When you answer that question in a digital business, it's actually different. And that's kind of what I focus on, is what does a moat look like in a digital business? And it turns out it's different. So that's my area. If I can share some slides here. I think we have to hand it off to me. There we go. So my book, Moats and Marathons, part 1 and part 2 are on Amazon. They're like $4. I don't charge much for these. This is not like a big profit thing. The whole book series comes down to one slide. And I find that's a pretty good useful tactic. It's a pretty good tactic for writing books. If you can say, look, here's book after book after book, but it's really just one slide. This is the slide, like this is the whole book on one slide, more or less, which is when you start to look at a digital business, you have to assess, does it have a moat? I call that the Warren Buffett question, because that's what he's looking for. So I even, you can see Mr. Buffett there. And there's really 3 things you look for the Warren Buffett type of business. Generally speaking, as soon as you talk about the competitive strength of a business, whether it's a Google or a Baidu or whatever, you talk about the moat, you also have to talk about, look, how good is the management team? That is generally the Elon Musk question. And if you actually go on the news and watch Elon Musk and Warren Buffett, they actually argue about this question on Twitter, where Warren Buffett talks about moats all the time, and Elon Musk tweets out little criticisms of him saying, I think moats are nonsense. I think these are nonsense. And then they actually fight. Well, they don't fight, they argue, which is really fun. And it's really this question of, look, is it about building a business with real structural advantage, which we call competitive advantage, the Warren Buffett question, or is it about being an exceptional innovator who's so fast that nobody can catch you? And that's Elon Musk. And he has said openly, I think the idea of moats is nonsense. I think the only thing that matters is how fast you can innovate. So this distinction between moats and operating excellence, innovation, you can actually symbolize it by Warren Buffett versus Elon Musk. And they argue about this question. So I look at all of it. I say, look, if you're going to look at a business, I'm looking for 6 levels. And I measure them very systematically. And I come up with the 2 that matter. Does it have a moat, which is the Warren Buffett question? And does it have a marathon, which is the Elon Musk dynamic I look for? I'm looking for those 2 things. And I sort of rate companies, and I determine this company can't be beat. I don't care who you are. I don't care how much money you have. This company, Alibaba, Tencent, Google search, YouTube, I don't know how to beat them. You give a very well-run company a big, huge pile of money. I don't think they can beat them. Other businesses, let's say Uber, it was very obvious early on that this company was quite vulnerable and was not going to be making a lot of profits. and it's not that strong as a competitive position. That was pretty early on, you could tell this. And they still don't really make much money. Neither does Didi, which is very massive in China, still doesn't make operating profits. Neither does Grab, which is in Southeast Asia, similar business model. So you can start to make assessments of these digital businesses, whether they are pure software creatures like the ones I just mentioned, or whether they are traditional businesses like Walmart, Carrefour, Coca-Cola, L'Oreal, who are starting to become more and more digital. You can assess traditional companies going digital, or you can assess digital companies like the ones I mentioned. I find this little slide here works pretty well. And the short version is look for the moat, look for the marathon. And I have checklists that I give people. Here's my checklist for how I figured this out. So that's kind of the theory. Let me give you an example, because that's, Now, one company you can look at is Baidu. Now, Baidu, #1 search engine in China. It's been around for 20 years. Robin Li founded it, one of the first digital companies of China. It's a company that a lot of people have a hard time getting a read on. That is this a good company? Is it not so good? It's one of these fuzzy questions that analysts struggle with. When you talk to people about Tencent, everybody knows Tencent is pretty strong. Everybody knows that. I try and do frameworks that let me answer the questions that other people struggle with. So a company like Baidu is interesting for me. Here's why. Like when I look at Baidu, one of the things that jumps out at me is the foundation of Baidu is a search engine. Now, when I assess digital businesses, I run through my moats and marathons. Search engines are some of the most powerful businesses we've ever seen. Google search, it's dominant globally. It has 80, depending how you rate it, 85% of the global market for search. That includes China. It includes Russia, all of these sort of walled off countries. Try to think of another business that has dominated the entire world 85%. That is an unbelievably strong business. And then when you look at #2, which is probably Bing, #3 is Yahoo. They've maybe got 3% of the market. Together, they probably have 4 to 5%. So you've got one company that dominates search everywhere on the planet. That is arguably one of the strongest moats we've ever seen. And then you can actually look at Baidu, which is search within China, search of Chinese language. It's got 75% of the market probably. If we look at Naver, which is a search engine in South Korea, they've got 70%. If we look at Yandex in Russia, 60 to 70. So this business model of search is incredibly powerful everywhere we see it. But people sort of struggle with that for how do you take apart Baidu in China? And here's how I do it. I run my 6 levels of competition, my simple graphic, and I ask myself various questions like, does it have a competitive advantage? Does it have a moat? And the answer to that is a yes. It absolutely dominates Chinese search. It does have competitors. It has Sogo, which is #2, and it has WeChat search, which is within WeChat. So it's not the only player, but it's got you've got 2 to 3 companies, that's the whole market. And that is generally a good indication of competitive strength when you've got a whole market down to 3 players. On my street here in Bangkok, there's probably 25 restaurants. Nobody is dominating the street, but Baidu and Google can dominate a whole industry. So you can start to look at something like that. Okay, it's got all the indications of a moat. It has been traditionally fairly profitable. Baidu search throws off cash. Most people kind of recognize that. The question people have with Baidu is growth. because it is not in an industry that's been growing the same way, say, e-commerce has been growing or Tencent gaming has been growing. So as Alibaba and Tencent have grown over the last 10 years and become dramatically bigger, Baidu search has remained fairly flat. So now it appears much smaller versus these other companies than it did 10 years ago. So the way you tease that question out is you say, okay, I see a competitive dominance. This is a business that has a moat. It has profits. What it doesn't have is growth. And therefore, it is becoming smaller relative to the other companies over time. And that is really the strategic question that Baidu has struggled with. And this is why Baidu has jumped into various types of content. It jumped into local services, like it did food delivery for a while, but it sold that business off. It did multiple businesses. It did iQIYI, which is a video platform, a little bit like a YouTube, which is doing quite well, but it loses money. So what we've seen over the last 8 to 10 years is Baidu taking this very good search business, which is profitable, and then jumping into not so good businesses like iQIYI, which is video, Baidu Waimai, which is food delivery. Now they are going into electric vehicles, which is their Apollo thing. All of that is a search for growth. Now, I think that I don't really agree with what they're doing. And I think a part of this is a not terribly good strategy for assessing what is an attractive business you can win in versus let's just go after growth. And my sort of recommendation on this, which I've written quite a lot about, is if you look at Baidu in terms of my moats and marathons, the best strategy that jumps out is focus on your core search business because it is a very good business, and then focus on cloud because that's another very, very good business. And Baidu actually has a pretty good position in cloud, and it has a lot of AI capabilities. So the moat, here's the answer to the moats and marathons. The moats they should go after, search and cloud. The marathon they should run, artificial intelligence and machine learning, because that's how you win in cloud and that's how you win in search. So that's my simple sort of assessment of, you know, what they should do as a strategy. And that's pretty much my take on them. I've been looking at them for quite a few years. And I think that holds up. The core moat, search, and then go for cloud. Your core marathon, you want to run AI and machine learning. The other stuff they're doing, which is cars, Apollo, which is, you know, they got out of food delivery. They've gotten out of some of these business services. They're still in the video space with iQIYI, but it's been losing money forever because it turns out creating content in China is very expensive. And so iQIYI has been losing money. Tudo, Tencent Video, which is their two competitors, they're also losing money. They've spun that out, which is not a bad move. I'd probably merge that up with Tudo and get out of the cash burn. But I think that's an interesting question in its own right. And then I would go all in on, you know, kind of the strategy I laid out. So that's how I take these things apart. And I've gone through, I don't know, 300 companies with this approach in the last 8 to 10 years. It's been pretty consistent. Doesn't always get it right, but it's been pretty effective, I find. So I basically have spent, you know, the last year writing all this up into moats and marathons and laying out the frameworks for how to sort of take these things apart a little bit more systematically, which comes down to basically one slide. Anyways, and I think that gets me, I'm right on time. That gets me right to 19 minutes. But yeah, if you're interested in this stuff, there's 2 books up there now, Moats and Marathons 1, Moats and Marathons 2, 3, 4, and 5 are coming out, but these are short. They're like, you can read them in like an hour and a half. 3, 4, and 5 are coming out in the next couple months if I can, if I stay on schedule. But yeah, that's it.
Okay, excellent sharing, Jeffrey. This is an excellent introduction. And now we'll just summarize what we say, and then we'll see any question will come along. That's very good. Basically, you use one page explain the whole book, the key concept here. We try to put it into Chinese, and basically is 护城河, and then the 竞争优势. So this is the key point, because a lot of Chinese companies, basically they actually looking for this key concept and how to do that part. Yeah. And then here is you explain this 4 questions. It's excellent. When I read the book, part 1, part 2, I think it's wonderful. So that's why we invite you to be a speaker and introduce this kind of insight and concept to our connections here. It's wonderful. And then thank you for sharing these key messages. If our audience today would like to know more, recommend you buy the book from Amazon. And this is Jeffrey. And also you can subscribe for his podcast. It's really insightful and very informative. Yeah. While we introduce Baidu, because Finance Mandarin also have a Baidu all in AI, we're going to study Robin Lee, his management style, and his track record from search to AI and car. And then now what we next. Thank you for mentioning about his business, and then see whether he still keep ITE or just go to cloud. Thank you for that one. Yes, so this is the courses that we can provide. So here I hand over to Tara. Thanks a lot for Jeffrey.
Thank you, Mr. Towson and Vienne, for your insightful sharing. If you target the China capital market, come to Finance Mandarin. We help senior executives to learn firsthand China market knowledge and polish your business Mandarin communication skills. With our advanced AI learning platform, you'll be able to access the course content whenever you are. If you are a business professional who wants to maximize your investment in learning, Finance Mandarin is the right place for you. Before we leave, I would like to inform you of our upcoming Reading Club events in May. Please sign up now and stay tuned. For more course details and tips for learning Mandarin, follow us on Finance Mandarin, LinkedIn, Facebook, Instagram, and YouTube. Book your trial class now with us. I thank you once again for joining us today, and I hope to see you again in the future. Thank you.
Thank you. Cheers.